In this video, guys, I want to give you a quick guide to trading interest rate announcements. Stick around. Hey traders, warm welcome to you. Thank you so much for joining me. But I want to kind of give you an overview at the moment, especially right now where every blooming piece of data we get, there's some craziness going on, how to kind of think about and structure your trading approach to it. Now, caveat. Guys, trading this type of stuff is super whippy, dangerous. If you get it wrong, you can get wiped out. So, this extreme volatility is something for experienced traders to potentially capture, but even super experienced traders can get caught out. So manage risk, keep it small. Don't take anything that I say for gospel. Go and do your own research. I don't know anything, pretend I don't know anything, pretend I'm talking nonsense. Come up with your own ideas. But these are maybe seeds of ideas that you could take away. So the first thing is do your homework, right? So why do your homework? Go back and look historically in the last 3, 4, 5 events, what happened in the announcement. You might find a pattern. For example, there's been a pattern recently where the Fed, when the Feds come out, as soon as the press conference happened, which is 7:30 UK time. I should have done that immediately, but so much stuff going on with crazy Bank of England and Bank of Japan stuff. I forget what's what. 7:30, we have the press conference. The FOMC interest rate announcement comes out at 7 o'clock UK time, press conference at 7:30. There has often been a rally. And so just literally going back and looking at what happened, and you go to TradingView, you can easily go back on whatever platform you're using and just see what happened and making notes. That would be obvious to you. Say, right, well, maybe that's going to happen again. If it starts to rally, I'm going to jump on it and see if I can get anything out of it. Happened. Who knows what's going to happen next time? I don't know. And when you're watching this, who knows if that's... But the point is, it's homework. You go and you say, what has happened? And, what happened relative to what the announcement was? Was it a surprise? Was it as expected? And then you can kind of get this data and see. And you can kind of get an idea then of maybe how you might want to respond. And it's fine to just watch and observe this stuff, by the way. You don't have to trade it. So do your homework. Absolutely key. Important to do this. If you're going to allocate risk capital to a specific event, you should know what historically that event does. Even if there's no pattern, it's like, okay, I kind of see what's going on. So mean reversion prior. So I'm a big fan of trading a mean reversion strategy before the data, because no one's really positioning for the data, right? No one's really kind of getting crazy. Sometimes you get these kind of chugging trends, but more often than not, it's quiet, it's ping-ponging back and forth. And it's something you can kind of use a Keltner or a Bollinger or something around like a mean and potentially trade it. Now, you've got to be a bit careful with this because sometimes it's very quiet and it doesn't take much for it to uncouple itself. But I tend to think mean reversion. So if you get kind of a bit of extension that runs on and it looks a little bit like it's stretched, there might be an opportunity for a fade back to a mean, because generally speaking, no one really wants to commit massively before the data. Okay, so bang, data comes out. Now, big warning on this one, big warning. Trading during this announcement few seconds is wild. It's crazy. If you get a bad feel, it gets stopped out instantly. You should make a mistake, it just goes, it's game over. So I'm not recommending you do this, but one thing to look at is it's an algo party, right? And why is it an algo party and why do we get these swings? Is because the order book goes so thin. If you look at the order book in the futures contract, you can see that it's so much thinner, and that basically means that it doesn't take much for someone to come in and put a market order in, because there's no liquidity there, you get these big moves, and it leaves a vacuum on the order book, and the side note whips back up. And so one thing you can do, and again, caveat here, you got to be careful, because if the interest rate announcement is a big surprise, it could just be a one-way street. Could just gap up massively, then just chug and chug if it's a really bullish surprise or bearish surprise to the downside. But let's say it's kind of in line or small surprise. Very often you're going to get this kind of whipping up, whipping down. The next few minutes it's kind of rallying up, then it comes back down, it rallies, and you get this kind of opportunity. If you time it, it's a tricky trade. It is a tricky trade, but timing it to fade those kind of extremes, and again, dangerous trade, but can be lucrative. If you kind of look for this extension, a pullback through, kind of frame it with a fib, use a stop above the high, be very strict with your risk management, there's the potential opportunity. I don't trade this with massive size. It's kind of something that's maybe a little bit of, not fun, it's not fun. Hey, trading's fun. Yeah, I admit it, trading's fun, right? You like trading, I like trading. But you can treat it like that and say, hey, this isn't going to really add to my kind of performance this month, but maybe I trade it with small size and see how I get on, and maybe use a leg in. You're like, hey, if I get something that then extends, I might add to that trade and position myself accordingly. But hey, hey, algo party, fading that generally is the way to go most of the time. And like I say, it's super dangerous. I'm absolutely not suggesting you do this, because this sort of thing just goes boom, you fade it, carries on going 500 points, you are out of the game. And then the final thing is to look for a trend to develop afterwards. So very often it kind of mean reversion, quiet market, algo party when the announcement comes out, then it kind of does it, and then it chugs into a trend. And very often it will be after it's attempted to go one way. So it might fake out to the high side here and then go lower and then kind of trend for the rest of the day. I mean, that's perfect scenario, and I love that. We don't always get that. That's the kind of thing I like to look for. Like this algo party, I don't always get involved in that, but if I see it kind of oscillating around and then I see a trend develop, I'm like, okay, that could be where we end up closing. And because it's just a few hours before the market bell, if you're trading an index futures for an equity, by the way, an equity index contract like Dow, S&P, Qs, something like that, then you tend to get that little bit of urgency. It's like, ooh, got 2 hours left to get the deals done, get everything done, and you can get those extended trends that push right into the close. So look for a trend to develop afterwards. So do your homework, number one. Number two, mean reversion prior generally is the way that I like to approach it. If there's opportunity, again, it's a tricky one. Fade the algo party, that's super deadly, but it can have some fun in there and kind of trade small size or just see how it moves. I'm trading on debit, not demo. And this is more like the trade that actually pays you, and you can perhaps size up a little bit harder on, of course, managing risk, looking for the trend to develop afterwards. Can still be whippy though, can still kind of look like a trend and just go phoom, and chop your face off, or rip your face off, chop your legs off, depending whether you're long or short. But yeah, that's generally the approach and structure that I like to look at. Let me know how you trade the interest rate announcements, because there's going to be some pretty spicy ones coming up. There have been recently, and I'm sure there's going to be some pretty spicy ones, especially when we get to the point where the expectations are X and it starts doing differently. So, oh, we're not gonna raise by so much, and then it's some massive raise, or they start to taper off sooner, and it starts to be the peak. You know, these type of things. We're getting to that turning point where people don't know, and it affects the market so significantly because it's such a big lever to pull for the economy. So anyway, check it out, guys. Trading interest rate announcements. Be careful. Get your risk managed. The next one. Bye bye.